Anand Tandon joins in on the show right now. But before that, I just want to quickly take in a comment on the index from Naresh as well. Naresh, we've breached 19,900 now, 19,896. What next on the cards? What levels do you watch out for from here?
So the view on the index is we are seeing today the fall purely due to the two heavyweights. A large part of it is coming out from HDFC Bank. 19,800 is the base for the Nifty, 45,000 for the Bank Nifty. That is the point of time. As closer to that, you want to initiate a buy. So overall, the bias remains positive. We went into a new all-time high. Some bit of jitters around this place would be normal. It's only when we start breaking 19,600, 19,700, that is where the trend changes. So for now, it's a buy on dips closer to 19,800.
Okay, so buying on dips is what is being recommended by Naresh on the index itself. Let's take a look at the movers. Is there any other name which is popping up? Of course, RR Kabul has seen a good listing, 16% higher. SJVN is high by 7%. Shipping Corporation of India, Chennai Petro, Nazara Tech. These are some of the names which are gaining in the trading session. On the losing side, it's PSU banks all the way. So UCO Bank and IOB, Punjab Sind Bank, Central Bank, all coming under quite a bit of pressure. But we also have Anand Tandon joining us on the show. Anand, let's begin by discussing the auto sector because of late it's been doing quite all right for itself. We spoke with the management of Bajaj Auto today and they're talking about how demand has seen a solid pickup from the months of July, August onwards. And for now, they're saying that demand is fairly broad-based across rural as well as urban India. But within two-wheeler space itself, what would you go for? Would you go for the mass themes, the likes of TVS, Bajaj, Hero, or is the premiumization which is going to be at play, maybe a Royal Enfield?
Frankly, I would not go for two-wheelers in the first place. I think the valuations for most of these companies are, 50 to 60% higher than they have been at a time when they should have been doing at a time when they were doing very well a few years ago, compared to what they are doing today, where they are still struggling to achieve growth and where the competition has actually doubled up quite considerably because of technological changes and new companies which are unlisted coming in and becoming significant players, for example, in the EV two-wheelers. So with a more clouded outlook for the volume itself being lower than what it used to be, and a valuation which is, like I said, a 50% premium, there doesn't seem to be much of a case to be made. More importantly, I don't think that they are at least Bajaj Auto is expecting to see a widespread growth in terms of significant recovery in the festive season, which itself is not particularly exciting. So if you have to be absolutely in that area, again, the premiumization is definitely a longer term theme. But that said, again, the number of new players that have come in and the new vehicles that are being launched will automatically put a kind of a spoke in the wheel, as it were. And therefore, I would expect that it will be a while before the market shares, etc., settle down there. Broadly, I'm not very bullish in that sector.
Just earlier today, we chatted with Rakesh Sharma from Bajaj Auto, and he says that they're actually witnessing a turnaround in terms of retail sales in the quarter gone by, as well as the early signs that they're seeing in this quarter too.
Quarter one and quarter two, July and August, have seen a little bit of a turnaround in retail terms compared to the previous year. Till about quarter four, the industry was still in decline. But towards the end of quarter one, and then certainly in July and August, we have seen an uptick in the industry. This is, in our opinion, being driven by the top half of the industry, which is the 125cc plus segments, which constitute almost 50%, a shade under 50% of the industry. That is growing at a faster pace than the bottom half. The demand at this point of time seems to be evenly spread across urban centers and rural centers. Retail financing is progressing very well. We are seeing tenures of loans going up, which is a very good indication because that suggests that people have confidence in a continued stream of income based on which they are taking longer tenure loans. So I would say that the curve has sort of turned around and now we are looking directionally upwards. But I would say that we are still in middle single digit, 6 to 8% growth levels in terms of retails.
Okay, so that was the commentary coming in from the management of Bajaj Auto, just taking stock of what else is happening in the market. Actually, not a whole lot. There are some of the other banking names like AU Small Finance Bank, which is perking up. But, Anand, what's your take on AU Small Finance Bank? Because this year, the stock hasn't done much. In fact, saw quite a bit of reversal because otherwise it was on a one-way up move.
Well, we've just heard a lot of commentary since yesterday on why HDFC Bank has suddenly become a sell. And that's a bank which is trading at 2.5 times or now less than 2.5 times 1 year forward book value after the adjustment. And it still will generate, it will have 1.5% lower ROE, but will still generate an ROE of about 16%. Compare that to AU Finance Bank, which will have half that ROE and perhaps the same amount of price to book. I don't suddenly fail to see the attraction for buying such banks, which are so small that any kind of a problem or volatility in the market could actually change their profile quite significantly as far as their asset side is concerned, and no particular advantage in terms of the liability profile either. So I would still argue that if you have to be in banking, and obviously we have seen the best in terms of NIMs behind us, but I would suggest that the earnings will still continue to grow from here, and that is perhaps one of the few sectors which can actually demonstrate reasonable profit growth over the next, let's say, 6 to 8 quarters without spoiling up the balance sheet by any significant amount. And at the same time, is trading at valuations which are not that expensive, then just stay with the large banks rather than try and be very adventurous in this market.
Just looking at the oil sensitives as well, Jefferies came out with an interesting note on the oil and gas sector, and they've talked about OPEC plus production cuts, the low US inventories, which is likely to keep oil prices elevated according to them. We're already hitting that 95 mark on Brent. Reliance, they say, is limited impact. The city gas distribution companies as well will have a limited impact of this. GAIL, of course, stands to be a beneficiary of high oil prices, and OMCs are going to see a cut in their margins and EBITDA as well. That said, let's just revisit. Of course, Reliance has been a rank underperformer today, but let's see how bad a hit it is turning out to be for the OMCs today. So HP, BP, IOC will just come up for you on your screens next as well. Kunal, is there scope to short these stocks further, the OMCs, or any of the oil sensitives for that matter?
Yeah, I think OMCs could be a good short. BPCL could be a good short. I'm not sure whether IOC could be a good short because the stock is still into a range. 90, I think, is a support for the stock. It's been a slight outperformer. I would not say by a huge margin, but at least in the last 2-3 months, when there was this recovery for these OMC stocks, IOC managed to outperform the other two peers, BPCL and HPCL. So I think on the way down, maybe I think IOC could be a bit more resistant in terms of breaking below its support. I think BPCL could be a stock which could show signs of weakness. Even on the way up, BPCL had shown a lot of underperformance with respect to the price gains. So I'm sensing that maybe this time around it could be a good shorting opportunity from current levels. And what we're looking out for is not a major directional change, but even if it's a 5% swing, which means 335, 336 could actually be a decent target for HPCL.
In fact, on that note, let's get in some buzz on the other buzzing stocks in trade and across the dealing rooms as well. Let me take it across to Sharad and find out why Nazara Tech is doing so well in an otherwise weak market. Sharad?
Well, yes, in focus we are having Nazara Tech, and what we are hearing from dealers is buying is seen in two counters, the HNI counter as well as select DIs as well. Now, if you look at the volumes also, that has spiked up, coming in at almost 2 times its 30-day average. The stock itself has been on a tear. From July lows itself, the stock is up more than 37%. Recently, 2 important institutions, first is of course SBI Mutual Fund, and also investor Nikhil Kamath had invested in the equity of the company and they had acquired stake in the company. And currently the stock itself is also trading, however it's all the daily moving averages. Now also the company will be meeting astute investors and marquee investors in an important meet by JP Morgan. The investment summit is scheduled to happen on September 28 as well. Now the recent fundraise itself, the street is expecting that the company will be using these funds for organic as well as inorganic expansions, and also importantly they will be actually infusing funds in 2 of their businesses, which is the freemium business as well as the gamified early learning segment. So this is the buzz coming in Nazara Tech.
We'll watch out for Nazara Tech, of course. The stock today is up almost 5% on good amount of volumes as well. But Anand, the other space which has been seeing quite a bit of traction is the entire real estate pack, whether it's the Mumbai players or the DLF, the DLF and the NCR players, or even the one down south. All of them have seen quite a bit of re-rating this year. Do you think the bulk of the rally is done and it's time to take some chips off the table, or do you expect the rally will have more legs to go?
Well, real estate kind of business is something that is a requirement for most people, and therefore there is a long-term demand for it. Now, that said, obviously, it's a highly cyclical industry, and like any other asset, as prices go up, suddenly people discover that they are losing out, and they suddenly jump in and buy the stuff. What we have seen is that in places like Bangalore and even Gurgaon, for example, for the longest time there was hardly any demand, and now as the prices have started to move up, the demand is such that there is not enough supply in the market. So this kind of cyclicality means that you have to be careful about when you are looking to buy, especially if you are looking to, if you're buying the property, it is okay because you're looking at it as a consumer. But if you are looking to buy the stocks, you have to assume that when the market is really doing really well, that's not necessarily the best of times to jump in, because you would have much of the sales booked. So you will, of course, have the advantage that over the next few quarters, these companies will continue to report good numbers. But in terms of the pipeline, I think it is going to become more and more challenging to be able to find buyers as the price goes up higher and incomes don't keep track. You've had a situation where the purchasing power vis-a-vis, from a mortgage perspective, was one of the highest till, let's say, about a year ago. It is not the case anymore. I think there is probably some more legs to go, but it is now not something that is, buy across the board. You have to be a little more selective about the micro geography of the areas that you are looking to buy.
Incidentally, this morning we were chatting with Ashok Tyagi as well from DLF, and he was talking about some of the premium, extremely high-end projects that DLF has recently launched, and he says that demand is actually extremely robust, much to their surprise, even when it comes to the utmost premium segment of real estate in Delhi NCR. Let's hear out what he told us.
Market is looking pretty strong right now, and it's really, it's across segments from the super luxury, premium. If at all there's been some slowdown, possibly it's been on the lower end of the market because of the increased EMI rates, etc. But really, most of the premium and premium plus categories where we typically operate in are actually very strong. The demand has been strong. It's braved the interest rate cycle. Hopefully, now that we are at possibly the fag end of the interest rate hike cycle, things are looking even more sort of, stable going forward. I think at least there is possibly, despite the inflation, I think there is clearly a greater sense of optimism, at least in the upper middle classes and the classes beyond them, for sure, which I think is one of the biggest reasons driving this entire housing boom. The second thing, of course, also, which is very important, is that the supply has shrunk. In each micro market, really, if you see, the supply is basically now coming from the 6 to 8 big organized players.
Okay, from real estate, let's talk about pharmaceuticals now. And at ETNA exclusive, we seem to gather that there is a new twist in the Cipla promoter stake. In fact, we learned from reliable sources that Blackstone has actually pulled out of the race. In fact, my colleague Anurag Joshi joins in with more details. Anurag?
Yeah, that's correct. So Blackstone has pulled plans to acquire 33.5% equity holding in Cipla, which is held by the promoters of the company. That's the Hamid family. The key reason why Blackstone has pulled out from the race is because it perceived the purchase cost for Cipla, which is said to be around $7.3 billion, to be too high. Blackstone had put a non-binding bid for the stake in Cipla. So that now leaves a key contender, which is Torrent Pharma, as a contender for the promoter stake in Cipla. And Torrent Pharma is scurrying to put together a private equity consortium. They're trying to bring in additional investors into the deal because the deal size, the sheer size of the deal, which is over $7 billion. They've tied up $4.2 billion of financing. This is what our sources are telling us. That includes a $3 billion syndicated loan, and $1.2 billion will be a promoter financing, which will be loans against the pledges of shares in the Torrent Group companies. The third contender, which is also looking at the deal, is Dr. Reddy's Labs.
Thanks so much for joining us, Anurag, with that latest. So that's about the Cipla deal, and seems to be that Blackstone has withdrawn its plan for buying the founder's stake. But shifting focus away from what's happening in the pharma space, and quickly, Anand, I wanted your take regarding Escorts as well. There was this news flow today that the company is now looking at foraying into the NBFC space as well. They've allocated around 200 crore rupees for this. Looks like it's the new fashion in town per se, because Bajaj Auto also said that they're setting amounts aside for coming out with an NBFC to fund the Bajaj two-wheelers, and now this one is coming in from Escorts. Your view?
I wish manufacturers would remain with manufacturing and leave lending to people who have been doing lending. There is no doubt that it will initially, any kind of funding that you would provide to your dealers in terms of selling it may initially perk it up. But then remember, there are any number of NBFCs and banks which are willing to lend to credible buyers. At a reasonable price. It's a very highly competitive market. I don't think auto financing of any nature requires any additional new players to come and join. And the feeling that you're not able to sell or increase your market share, perhaps because somebody else has a better financing, I think is kind of little perhaps mistaken, because I don't think that anybody really cares about who's actually providing the money, so long as the product is well priced and the product is something you want to buy. So I wish they would actually focus more on what their core business is and leave the financing to the financiers. But unfortunately, as you said, there are people who think that they want to do it. Will it make any major difference at the size that you're talking about? Not really. But we'll have to see how it goes. But I don't think it changes materially either way the prospects of the company.